entries for capital, drawings, then for goods and assets. Now let's see the entries related to goods going out of the business other than sales or purchase written. These kinds of transactions are related to goods going outwards from the business. These are of 6 types. Let's start one by one. The first type is, we have seen earlier, goods given away as for personal use of the owner. Here, the owner of the business withdraws the goods for personal use. So, it becomes the drawings for the owner. So, the entry will be drawing account debit, amount to goods withdrawn for personal use. Account credit. Fine. So the drawings account will be debited and the goods withdrawn for personal use account will be credited. Instead of goods withdrawn for personal account, these days purchase account is credited. Instead of goods withdrawn for personal use account, these days purchase account is also used. Now, these days instead of goods withdrawn for personal use account, purchase account is used instead of this, which makes it easier for noting down in ledgers. Now, moving on further, the second type is goods given for as donation. Here, goods of the business, if kept in the business, can be sold today or tomorrow, and in exchange of it, cash or check can be received. But if the same goods are given to some trust, charitable trust, or any religious firms, a religious occasion, then these goods are just expense for the firm, right? So, the goods given away as donation are considered as expense and is debited. So, the transaction for this will be, the entry for the transaction related to donation will be donation account debit to goods given as donation. Here, donation is the expense due to which it is debited. Likewise, if the donation is made to some charitable trust, then too donation account will be debited and goods given as donation will be credited. Moving on further, the third type is goods destroyed by fire. Here, goods may be in the office or in the godown or in the factory, wherever the goods are kept. If any kind of fire occurs, or because of rain, or because of any accident, any kind of loss that occurs to the business, because the goods are destroyed. May that be because of fire or rain or because of flood or water or any kind of accident, the goods are destroyed. Then it is a loss for the business. If the goods were properly available, then the owner would have sold it and obtained some money. But because they are destroyed, they have to be let go on. The expense has to be incurred by the owner. So the loss due to the destruction by fire or rain or by the accident, it has to be considered as a loss which has to be debited. So the entry for this kind of transaction will be loss due to fire account debit to goods destroyed by fire. Instead, if it was due to the rain, it would be due to rain, and here also due to rain. If it was because of the accident, it would be written here accident or here accident. Whatever the loss occurs, it has to be mentioned here. The loss due to fire or rain or due to flood account will be debited. It is a loss, so it is the expense. It will be debited, and the goods are going out. So the goods destroyed by fire account will be credited. Nowadays, instead of goods destroyed by fire, purchase account is also written. One more kind of thing that can appear is a few kinds of goods are perishable. Perishable means which get destroyed in a short period of time. For instance, milk. Milk has to be transported from Anand to, for example, Vapi. So during the transportation process, a few liters of milk just ooze out of the tanker. That is a loss. So that is loss due to wastage. That is also to be considered over here as an expense. So loss due to transportation account debit to goods or the milk destroyed through the transportation account. That too is a kind of loss that has to be written over here. Now, if the goods which are burnt in the fire are insured, if the insurance company is ready to pay you the amount of the goods which you have insured, which are burnt in the fire, then the insurance company account will be debited because you are getting the amount. So the insurance company account will be debited to goods destroyed by fire. If the goods are insured completely, if it is partially insured, for instance, goods worth rupees 50,000 is destroyed because of fire, and goods worth rupees 25,000 are insured with an insurance company, and they are ready to pay you the amount. So you are getting the claims. Then 50,000 is burnt, 25,000 of amount you are going to receive it as your claims. Then the entry will be insurance company account debit with 25,000, loss due to fire account debit rupees 25,000 to goods destroyed by fire account rupees 50,000 will be credited. If the insurance company is ready to give you the payment for a portion and the remaining portion will be your loss, then the entry has to be insurance company claims account debit rupees, whatever the proportion of amount is there. Then the loss due to fire will be recorded as debit, and the credit part will be for the goods destroyed by the fire with the total of the amount you have incurred through loss and from the insurance claims. Now, moving on further, the next type, the fourth type is that of goods lost due to theft. Goods lost due to theft. Here, may that be when you go down or in your retail shop, wherever, if a theft occurs, if a robbery occurs, goods are stolen by the thieves. So it can never be claimed, or if you're insured, then again the insurance related entry will be that related to that of destroyed by fire. But here it will be a loss if the stolen goods are not obtained back. So the entry will be loss due to theft account debit to goods stolen account credit. Here the loss due to theft account will be debited and the goods stolen account will be credited. Now, moving on further, goods distributed for as free sample. We receive small packets of soaps or toothpaste or any small items in a very small quantity just for trial, right? These are given for as advertisement by the company or by the businessman. These are the items which are not sold directly by the businessman. These are given as samples, as free samples to the customer. So when a businessman gives goods as sample or any items for advertisement, it is an expense for the owner because he has to produce the goods or items, right? Then only he can give it for as advertisement. So this kind of goods going out of the business are considered as expense. These are advertisement expenses which are to be written down as advertisement account debit to goods advertisement account debit to goods given as free sample. The advertisement account is an expense because of which it is debited, and we know the rule of expenses. The expenses are debited and the incomes are credited for nominal accounts. So advertisement is an expense due to which it is debited and the goods are going out of the business. So the goods given as free sample is credited. Fine. The next kind of transaction is goods received as free sample. Goods received as free sample. Well, as a customer, we get thrilled when we get any kind of free items, right? In the same way, if a businessman receives a bulk of goods or items as sample for checking, it is like the goods are coming into the business. but in exchange of it, nothing, right? The businessman has to give nothing. So it merely becomes a non-economic transaction where the goods come into the business, right, but nothing goes out of the business. Neither the businessman has to pay any amount or he has to give any other goods in exchange of these goods. So it becomes a non-economic transaction, because economic transactions need at least two parties or two transactions in exchange of one. So this is a non-economic transaction, due to which these kinds of samples received by the businessman are not written down in the journal books. So non-economic transactions are not recorded. But if these samples are sold by the businessman for any cash or any credit by this businessman, then it is definitely an income for the business. For instance, received sample worth rupees 5,000 from Mr. A, and from these 5,000 rupees of sample, if the businessman sells 200 rupees worth goods to Mr. X, then rupees 200 is an income. So the transaction for this will go as and the, Mr. A is paying you. Then cash account debit rupees 200 to sales account rupees 200. Here there is no need for mentioning if it is a sample or anything. It is just you are selling it as your goods. So when you receive a sample, free sample as for advertisement by some other person, it is a non-economic transaction. But if you sell the same sample to someone else, then it is an economic transaction, for which you have to write the for credit transaction the name of the person or the datum, then to sales, or for cash transaction, cash to sales. Fine. Now these were the types of transactions relating to goods going out of the business other than purchase or sales or purchase return. Hope so you've understood it. Now thank you. So these were the types of transactions relating to goods going outside of the business other than sales or purchase return. Hope so you have understood these transactions and journal entries. Now moving on further, we'll see in the other video how the transactions related to banks and other kinds of transactions are written down in the journal book. Thank you. Please like, share and subscribe to my channel.